people answering cold emails and then like handing over tens of thousands of dollars for like services and contracts. It was a weird thing, but I thought I was over it. But as we started to send emails, I realized that I had a glass ceiling or like a limiting belief or limiting factor around the scale and the size of the companies that actually open these emails. It's not very likely that the founder has a full exit. They stay on a 1 or 2 year period as an earnout, or they keep the founder on at some capacity because they have all the knowledge. Sometimes it can be as like a consulting period where they keep them on. Sometimes they pay them a retainer, but usually it's in the form of like an earnout. 90% of the sellers that we speak to, both sides know that the founder will stay in at some capacity.
Craig, welcome to In the Query. Super happy to have you here.
Yeah, awesome. I appreciate being asked. These are always good fun, and yeah, there's a nice reason to like speak with you as well.
I think we last spoke, a year ago. You weren't doing your current venture just yet. Is that right?
That's a good question. So if my timing is correct, no, it hadn't started. So for 6 or 7 months last year, I honestly did my best not to work. I didn't want to work at all. My marketing agency was running. We were fulfilling clients. I decided not to take any more sales calls. I switched off all that outreach. I didn't want to work. I needed some time like to myself. But I don't know. Universe has like a weird way of like delivering things at the right time. And what started off as a favor to a friend, and the favor being, can you help my friend find businesses to buy that are not publicly for sale? And long story short, the reason why that materialized is because I shared my outreach system and the system that I'd built over the last 2 years with a couple of individuals. And then I also shared the results we were getting and the quality of individuals we were speaking to. So that system got shared by one friend to another. And then their friend's friend was the one that said, can you help me find businesses to buy? And in the back of my mind, I'm like, I want some time off. Like, I don't want to do this. But it was like, it was such a weird question to be asked in an area like mergers and acquisitions is not an area I had any experience in like 16 months ago or 15 months ago. But I thought maybe I can test this system to see if I can do it in a different way for someone else. And it worked. It worked really well. So what started off as one investor in the US in March, April last year quickly grew into like 3 or 4 investors and private equity and strategic partners. While trying not to work, this was like gaining momentum in the background. And then in the weirdest way, as like everything like these when these things happen, while we were doing outreach for the e-commerce clients and investors, one of my emails from the system that we've built landed in the inbox of a female fashion like apparel brand, and like that's who we were trying to connect with essentially. The owner of that brand emailed me back and said, I'm too small for what you're looking for. Like, my company's quite new, so this isn't going to be a good fit. But I think you should speak with my husband. Bear in mind, this is a cold email out to this individual. And then she replied back saying, I'm not a good fit, but speak to my husband. And then the email went on to say, my husband's looking to acquire a mid-eight figure tech company. And I read this email and I'm like, this is not true. This is like, I thought I was being scammed. Like, I was the one that sent the cold email, and then I had a reply back, and I thought, there's no way this is true. It can't be. I shared the reply with a couple of my team members, and I delayed taking the call for a while because I'm like, this is pointless. There's no point doing this. Took the call anyway after like 2 weeks, and yeah, it's a Chinese American investor. He's like one of our active clients right now, and we help him speak to tech companies. So we branched out into SaaS, software, AI, cloud, and IT based companies. And from there, that kind of snowballed as well. So like we had the e-commerce outreach snowballing from word of mouth, and at the same time we had the tech stuff gaining momentum. So that kind of when that happened, I saw for the first time. So this was in like September. This was in September last year. I saw for the first time where this new company could go, because prior to that, I was kind of just doing things in the background to like help some friends essentially, while at the same time trying not to be fully involved in anything because I needed some time off. But when September came around, I'm like, I actually feel ready now, and all of this other stuff is like happening in the background. So that's like the long, short version of how it started, and like how it grew a little bit. And what we know, April 2024, and what started off as me and one team member sending the emails, like running, looking after the tech side of things, is now me plus three other team members, one from Australia, two from Australia, and one from New Zealand, who I met in Bali. And they had similar skill sets, but also different skill sets that complemented like what we could do. That was October last year. And now we have other individuals who from the UK and Austin also are interested in like coming in to kind of help grow it. I'm not quite sure what that entails as of today, but it sounds exciting. I think it'll be interesting to see what happens over the next couple of months. As of now, nothing's officially changed, but it's possible that it might change significantly in the next 6 to 8 weeks. But yeah, been a wild year. I know I covered like the big picture of the course of the year, so I'm happy to like dig into anything that came up then.
My very first business mentor went to build a publicly traded company that does mergers and acquisitions, and I've been involved in different degrees with the company, and I interviewed him recently. So it was very interesting to then, speaking with you, says, oh, you've also got into the M&A world. Very interesting, right? So let me get this straight. You started helping a few friends acquire some e-com businesses, and then that's gone to finding some significant buyers and branching into tech and SaaS. So let me ask you this. Has there at any point, and I know you've kind of a cheeky question because you've already pointed at it, been a step in which you had to shed something that you believed that was possible and not possible? And you mentioned you had this guy that says, oh, I'm interested in buying something in the 8-figure range. How was the process for you to say, you know what, fuck it, I'll take the call? What change do you have to make inside of yourself?
Yeah,
Thumbs up.
I thought I didn't have glass ceilings around outreach because I've sent emails and outreach since 2021. So this isn't like a new thing. I've been doing it for like a while. One for my agency, and I've also helped like other people with outreach anyway. And I didn't think I had any glass ceilings about like who opens them, let alone buys. I used to have those when I first did outreach in 2021 and 2022 because it was a weird concept, like people answering cold emails and then like handing over tens of thousands of dollars for like services and contracts. Is a weird thing, but I thought I was over it. But as we started to send emails, I realized that I had a glass ceiling or like a limiting belief or limiting factor around the scale and the size of the companies that actually open these emails. And the thing that shifted, so there's like two things to this. The thing that, to answer your question, the thing that shifted was to take the call from that investor on the original email. It was more curiosity. It was more like, well, I got nothing to lose. I'm not giving this guy anything. I may as well take this call. I did hesitate for like 2 weeks because I thought this is just not true. It can't be true. So I hesitated for 2 weeks, and in the end, I had a gap in my calendar because I had a few days where calls weren't booked. I thought, I'm just going to schedule it. If he comes on the call, it comes on the call. And then, so it was more led by curiosity about like, well, let's just see, like, who is this guy? Like, is he serious? Is this something that can be helpful for both of us? And it turns out it was. So taking the call was a good move, eventually. The other thing was it the email landing in this guy's inbox started to help me stop. It's the right way to say it. It stopped me looking forward, and it almost like pointed my vision up, as in, well, if we can speak to this level of business owners, which essentially at that point was e-commerce businesses doing around 5 to 20 million in revenue. That's like what we were shooting at, because that's like who we were helping. Those are the types of investors we were helping to like speak with e-commerce brands. But then I thought, well, let's just see what happens if we expand the reach in terms of the size and the revenue of these companies. And in doing that, after speaking with the investor for the tech company, I thought, well, let's just not put up a limit on revenue, just see what happens. And within, I'd say like 2 or 3 weeks, I personally had like 3 meetings with billion-dollar companies and multi-billion-dollar companies. So any glass ceilings I had around who is going to open these emails just completely obliterated. And that now I think now I don't have any around who will open these emails, because we speak openly about their business. They share the important things that we need to ask, and it's surprising. It still surprises me, but it doesn't like shock me anymore. It's surprising, but not shocking, that CEOs and founders and presidents of like 9-figure companies and like multi-billion-dollar companies, they open their emails. They open their cold emails, they read them, and they book calls. The key is just right time, right message, right person. And for whatever reason, we seem to have hit a nice cadence with what we say in the emails, how we say it, and how we position what we say. And it seems to be working quite well, because the feedback we get from business owners at all levels is, and this is like paraphrasing, but this is like a general theme. It's I I never open cold emails, and I very rarely open cold emails, let alone book calls. But for whatever reason, there was something in your message, your email, and your website that made me want to like take the call. I don't know what that is. Like, I don't know what it is specifically that they see, or what resonates with them. But something does.
What's your gut feeling on this one? What do you think it could be?
My personal feeling, and I've shared this with like other people in my company. My gut feeling is everybody is doing outreach and wanting to connect with like the lower revenue businesses, because it's almost like this is okay to do, because everyone else, as you increase the scale of revenue and size of company, has things sorted. So like they have all their ducks lined up in terms of like M&A, acquisitions themselves, growth. Like, my assumption was they all have this figured out, like right away to the top. So I think everybody shoots at like a certain band of companies, let's say like 20 million in revenue and less. And I think the reason why we speak with so many business owners above this threshold is because we're one of very few that actually do this at the high level. Because I think everyone else thinks the same thing, which is, oh, these companies at the bigger level, let's say $50 million in revenue, $100 million in revenue plus, it's almost like, well, what's the point? They're never going to open the emails. They already have things figured out. And my gut tells me that most companies can't have everything figured out. So I think that's the first thing. And also, people spend a lot of time in their inboxes. Like if you think about how much time like everyone spends managing tasks or like communication, you can try and minimize the amount of time you spend in your emails, but like it's on your phone, like it's on your laptop, like you're constantly seeing them. So people spend a lot of time there and they open up emails, especially if it's like an interesting headline or title. But my gut tells me that everyone is aiming at the lower level and not so much on the way up. And that's kind of the feedback we've had, but that was also my gut after, say, 4 or 5 calls, after speaking with big businesses. I would come off the calls in the beginning, so like in September, October last year, and I'm like, why is nobody else doing this? Why is nobody else going for like a certain range of companies? Because it's highly unusual. Like my calendar at one point last year, and same for my other team member Sam. Like my calendar was booked 6 weeks out in advance from like all of these companies that we were speaking to. Not all of them are a good fit, but like 70-80% of those were right within the criteria of what the clients and investors are looking for. So pretty good hit rate. But my intuition or my gut tells me that everyone had the same assumption as me, which is bigger businesses don't open their emails. They have teams that like run the inboxes. They have all the M&A stuff figured out. They're never going to answer an email about like an M&A query. But I was wrong, like big wrong.
Interesting. So I see a combination of two things here that just for these two things, I'm already extremely happy that we did this call because I've learned something, and I think everyone watching will. One is shooting beyond where you think, where you think is possible. And you say sub coach miliga, right? Everything is possible. Because what you said about instead of going forward, just go up.
Yeah.
Now going up always like can be a bit scary, right? Because if it's up, it's a bit like on the unknown. And the other one is on the pursuit of going up. This is still humans running those businesses.
Yeah.
Still dudes like you and me, different lives, different scale of the problems that they solve, different probably level of business. So not just business, right? And that was the next question that I had in mind was, okay, you reaching out to these CEOs, VPs of acquisitions, presidents of multi-nine-figure companies. I understand if you and I are busy, I can only imagine the lives of those guys. So how do you make sure that you get the ball moving as quickly as possible? Like what's the right combination of value / straight ask / is the calendar on the first email or after the response? Like how do you get them to move forward directly?
Yeah, it's a good question. So on the outreach itself, we're direct, and to the point. But I leave it with an open loop of curiosity, which is I put the ball back in their court, so to speak. So it's like, I have this, I can help with this, but do you think it's a good idea? So it's like, I have these good things in place. I have something you might want. Like I'm paraphrasing, but this is essentially what it is. But then I end it with, but do you think this is a good idea? So I'm asking them a question, and then they reply back with either, yes, this is a good thing that I want to know more about, tell me more, share more information, or most of the time, it's just send me your link so I can book a call. So it's more basically what I did is I looked at all my cold emails that I get to my inbox, and I thought there's a reason why I don't open these and action them. So what is it? And then I look for the themes and I look for what everyone else does, and everyone else does the same thing. So I thought, I'm not going to do that. I'm going to do what I would want to see on the other end. So I removed all the links. I removed phrases and sentences like, have you got 10 minutes for free? Like, do you want to jump on a call? I took all of that stuff out, and it was, I have something you might want. This is what it is, from a high level. Do you think this is a good idea? And then it's up to them to reply. We have a follow-up sequence over like 5 weeks, but the initial first and second emails, that's when we get the majority of the ball rolling. And then sometimes on the fifth email, which is the fifth week, we get some good traction on there, but predominantly it's the first and second emails. And then I try to have the calls within like a 1 or 2 week period. Yeah, basically as soon as possible.
I love the approach to it. What's everyone sending me? What's the reason I don't open any of this? What sucks about them? And let's just do the opposite.
Yeah.
I quite like it.
Yeah.
It's simple, it's smart, it makes a lot of freaking sense. But the logic, once you look at the logic makes sense. The logic is a little bit counterintuitive.
Yeah.
Right? A lot of people think like, what's people doing? Let me replicate that and maybe improve it. Instead of like, what's people doing? Great, let's just do the exact opposite.
Yeah.
And there's a lot of different interests and, individual agendas at play. Do you face any challenges, not so much logistical or like closing a deal, but more of an ethical nature when in your day-to-day?
Yeah. I mean, everything is as good as the human on the other side. And after doing this for a while now, not just for this company, but for other companies and for myself in general, you get a vibe for somebody quite quickly. And if what they're saying and what they're doing is out of alignment or in it. And like a contract or like an agreement is only as good as the relationship that's like binding it, essentially. So in terms of like ethical issues and like maybe like conversations and relationships, we haven't had any like negative experiences. They've only ever been like neutral or positive. So I think a lot of that goes down to the types of businesses that we're speaking with. They're good companies, so we're speaking with good people. Like 99% of the time, that they're just good people. There's been a number of individuals where I've continued the conversation outside of company things just because they're nice people to speak to. So I think that says a lot about like the owners and the team that they have at those companies. But and it's the same on the investor side as well. I mean, in theory, like we could help an individual buy a company. We could help him with like some supplementary services. We can do the deal flow. We could help with a letter of intent. The deal could happen, and they might not pay. That could be a thing, and it goes back to the relationship is only as or the contract and the agreement is only as good as the relationship you've created with these individuals. So I think it goes back to relationship building and being okay with working with good people long term, because these things, they're not fast. They're not like selling services where it's like, you can sell a service within a week, like or 2 weeks. You could connect with somebody for the first time and close a sales call like 2 weeks, 3 weeks. This is different. Like there's way more money at stake, way more deal structure and organization, and way bigger responsibilities and consequences. So it all links back to like relationships with sellers and relationships with investors. And it's been a year. It's September, October, November, December. Let's say 6, 7 months. 7 months. We have good people around us on the sell side and the buy side, and obviously there's good people within my company, and that seems to be like the bedrock of the things that we're doing for these people. So I've no doubt that as this continues to grow and as things get closer to like big acquisitions and big mergers, maybe there's other agendas at play which we just haven't been exposed to. So I'm not like completely naive with what is possible and like the possibilities that do exist. But as of today, we've not had any kind of like negative experiences with relationships, individuals, agreements, contracts, that type of thing.
From the buyer end, what would you say you've encapsulated as perhaps the thing that they care for the most when acquiring a company?
I would say everyone is different, but like the criteria is going to change between like an e-commerce investor to like a SaaS or B2B SaaS. But what used to be, say 2, 3 years ago, a priority was revenue. Like big revenue companies, you were commanding higher multiples. And that tended to be the thing that investors were looking for. Is like, how much revenue is this company generating? And while it is still a metric that everyone looks for, I would say the most important thing above most other things, probably like everything, is profitability. So the EBITDA. It's like, what is the profitability of this company? Because there are many companies in every industry and every vertical that could be generating like high seven figures, good eight-figure companies, and they're breaking even or losing money for like 3 or 4 years. So from an investor's perspective, is that a good investment to make right now? Even with the skill set and teams they could bring in and the partnerships they could do, the market, from the feedback that we're having from the investor side now, is it's almost not worth investing in a company that only has high revenue but like no profitability. They're even like, the conversations we're having is, we don't mind what the revenue is, but I would prefer a range of profitability. So like 1 to 5 million in EBITDA tends to be like the sweet spot. So anything within that range, that's pretty much what they're looking for. Below 1 million depends on the investor, depends on the vertical, depends on the industry. But I'd say from a big picture, it's the profitability for sure, and then some other metrics like for SaaS, for example, it's like, what's the churn rate, like how long do people stick around for, all that kind of stuff. And then the e-commerce is like, what's the margins, what's the gross margins, does it make sense, is it above 70%? So those kind of specifics get a bit different and in the weeds a little bit, but I would say profitability, at least with the buyers that we're working with, yeah, profitability is like the number one thing. But that's shifted.
Interesting.
So I know during COVID, like for like 2 or 3 years, aggregators were going mental. Like the entire thing was a bit skewed, and they almost impacted the M&A space in a weird way, especially in the e-commerce, because they were paying really high multiples on revenue. So it kind of skewed everything. So you had a brand that was doing like 5 million, they might not be profitable. They might not have ever been profitable, and they might only be like 1 year old or 2 year old, and they were selling for like really high multiples. But that's not the case anymore. The only time that seems to be the case is with very well established companies that are like hundreds of millions of dollars, or at least like very, very high, like eight-figure companies, because it kind of is it's a different ball game to a company that's 3 years old. It's completely different. So I think at that level, the revenue multiples can make sense, and especially in this software space. But typically, profitability in e-commerce and SaaS and just tech in general.
Within ecom, let's say, just pick one in particular, other than the profitability, what else is, in your experience right now, looking at all the numbers and the P&Ls and so forth and the valuations, driving the most enterprise value?
The types of companies?
Within e-commerce, for instance, right? What brings the valuation up the most, other than profitability, in terms of general enterprise value?
Yeah, I would say, again, it depends. Some investors want US based or Canadian based brands. So location makes a big difference. But we also have some investors who don't want Canadian and US brands because they would prefer them from the UK and Europe, to bring them together and sell those to the US where they get high multiple. So it kind of depends. But geography, location is a factor. Gross margins for sure. If you're 70% and above, like, you're gonna for sure get a better what's the right word? Enterprise value, possibly, but you're just going to be able to position that company to significantly more buyers than if it was like 65 or 60% or less. Like, it's going to be very different. So gross margins, I would say. Subscription. So e-commerce brands that have a subscription model, like, I think that is like a big thing that investors are looking for. It doesn't need to have that in place, but it needs to have the ability to have it in place. So it's like maybe the owner just never got around to like implementing a subscription offer, or maybe they're doing it not quite that well. But if the product has the ability to be placed into a subscription model, or bolt on a subscription model, that'll definitely help for sure.
What
Like supplements.
about the founders staying or not staying within the business? What about like just the general leadership team? I know, for instance, in agencies, any founder-led agency realistically has a very high dependence on the founder, right? Typically, the founder is still doing sales, all these different things, right? But in ecom, what would you say is the dependency on the founder staying, not staying, and the general leadership team?
I would say it's not very likely that the founder has like a full exit. It's usually the case where they stay on, and again, this is getting into like the specifics of deal structures, but typically the founder can stay on as like a 5 to 25% equity until they continue growing the brand and reaching like maybe possibly an earnout period, so like a 1 or 2 year period as an earnout, or they keep the founder on at some capacity because they have all the knowledge. They're the only ones that have like all the knowledge around supply chain logistics, like how does all of this click. So sometimes it can be as a earnout period, sometimes it can be as like a consulting period where they keep them on. Sometimes they pay them a retainer, but usually it's in the form of like an earnout. But every investor that we speak with, deal with, and have spoken to about this, and 90% of the sellers that we speak to, like on a weekly basis, both sides know that the founder will stay in at some capacity. And that's the same for SaaS. It's very, very unlikely that it's like 100% exit. Even though sometimes the founder wants like, just give me all the cash, like I want
Yeah.
out. That hasn't been the case, or that isn't the case, I should say.
And seller financing versus cash up front, what kind of percentages are you seeing when you already talk about like a multi-figure type of deal? I know, within agencies, when you talk about multiple seven figures, you can see sometimes about 50% cash up front and the rest is on a performance basis. What do you see on these other leagues, particularly in ecom?
Yeah, between like 50 and 70%. It's different in tech. As an example, we have a client that's buying mobile apps, so like the Mac apps and just apps in general. And he wants to buy 100% of the app immediately, like within 30 days. That's his mandate to us. It's like, find me the app, find me a good app. If it's a good fit, like we'll fully acquire that app in 30 days, 100% exit or 100% like acquisition. But that's because they have a team of developers and they've repeated and rinsed this process over and over and over again. So they know it's a repeatable thing. But that's not the case with physical products. It's like, where's it coming from? Who makes it? Like, where's the labels? Like
Yeah.
completely different. So yeah, between 50 and 70%, which leaves it up to like the owner then to be 50% or 30% still involved in the company in some capacity. And that can be over a 1 or 2 year period. Typically, it's like a 1 year period.
Interesting.
Yeah.
You went from an unsellable business that you ran yourself that had your face and your name in it to help others sell their way larger businesses in a very short amount of time, in just a handful of years. I know you've learned an incredible amount in the process, from, again, unsellable to helping others sell the stuff. What would you say for those that are looking to sell their business, for those that would be on the seller end? What should they put in place to make sure that the business is attractive for these kind of investors that you speak with? Number one tip.
Yeah, the number one thing is financials. Like, as providing the financials are in good shape, and it's at least 2 years of clean books. The process of being acquired, partnered with, invested in, merged with, like whatever is the outcome, the process of that happening, like the time frame can be shortened significantly, because the amount of time it takes to clean up books in an active and growing business yeah, it's not an easy thing to do. Like we actually can do this. We have helped individuals do this, but we also have referral partners for like very large businesses, and it can take 3, 4, 5, 6 months, which is like the investor could lose interest, the seller could like change their minds. So clean books for sure, like showing like everything, but most importantly within that, within the financials, it's true EBITDA and also adjusted EBITDA for any ad backs. Have like the clean records in place for at least 2 years. If anyone's thinking about having an investor come in or a partner, growth partner, that's like the first thing anyone's going to look at. And even we've had sellers come to us and ask us to help them sell the business. So like the reverse of what we normally do, which is investors approach us. And we've said no to a few because like nothing was in place. It would have been too hard to take a company that we don't know like what the numbers are apart from like what the founder's telling us. And it's like, well, nobody can verify what you're saying. It needs to be clean for sure. So yeah, without a doubt, like the clean records or clean financials for at least 2 years.
Gotcha. Good. Craig, okay, I have way too many questions now where
Yeah.
I want to learn
There's
a lot
probably
more
more
as well.
questions now.
Yeah, I definitely do. So anytime,
Yeah.
you're most welcome to be back on the show. And thank you very much for those of you watching the show that want to get in touch with Craig. Craig, where should they go?
The other two places, probably my Instagram, and then which maybe I can share the link with you. Maybe that might be helpful. And I'll also give the company name, Mimpy Ventures. I'll give the link for this company as well.
Excellent. Those of you looking to sell a good business, get in touch with Craig.
Yeah, perfect. Thank you.
Craig, thank you very much for being on the show.
Yeah, I appreciate that. Yeah, catch up soon.
God bless.